Hello ladies and gentlemen, and welcome back to another special weekend edition of the markets around the world. We'll be taking a look at stocks, commodities and cryptos and the key levels that you need to be watching for the week ahead. But more importantly, we'll be also taking a look at some of the massive macro data that's coming out right now. We're in the worst month of the year for markets, and this means that September into October often coincide with more bearish action. But we just closed the weekly at a very important major support. We've been discussing the 3900, 3920 on the SPY for a little while. Will it bounce again like it did in the Friday? Well, of course, the bears came out and they sneakily tapped it at the zone that you didn't want to see them do it at. Stay tuned as we go through everything ahead. Well, welcome back everybody to the special weekend edition of the show. We'll be discussing a whole bunch of macro data, then jumping into the charts and looking at all the key levels for, of course, your favorite instruments out there in the world. But to begin with, let's talk about the jobs number, the non-farm payrolls, 315,000 new jobs, 3.7% unemployment rate, and really the story continues to be underemployment. That's the big thing there. The jobs number was not as strong, and it shows that weakness coming through. The way the market's interpreting it, often with non-farm payrolls, the first reaction, in this case was bullish, is often the wrong one. And then by the end of the day, of course, it had come back down to our major support. There was a swing there as well, which we need to discuss because it was a very sneaky position. A few people in our private Discord community, if you're ever interested, free 7-day trial, you can check it out down below, did recognize that, and they did okay by taking some profits. But we actually are at a key level here in markets. Let's talk about smart money versus dumb money. Basically, dumb money is getting fearful, or at least what we call dumb money. Is that the correct move? Well, smart money has actually been buying on this decline so far. I think a lot of that's got to do with the breadth thrusts that we've been looking at, but we will talk about that in just a few moments. We know we're going into, of course, Labor Day long weekend, and of course, I hope everybody has a great long weekend if you're from the US, but in general, after Labor Day long weekend, we often see some weakness. The Monday session obviously is the futures, then we get that Tuesday session, which tends to be kind of negatively correlated, and then we have usually a bit of a pull up on the Wednesday. So basically that turnaround Tuesday becomes potentially turnaround Wednesday. This time though, we'll be looking at some very key levels because it basically closed on the support. So will it be that we didn't run into the Labor long weekends, but actually when everyone comes back from their holidays in the Hamptons, they push up this market for a little while? We'll discuss that soon. IPO market is gone. Remember when everyone was talking about all these new SPACs and everything else that was coming out? We had so many companies, everything was valued heavily. Well, we're seeing really recession levels of IPOs in terms of no one wants to put their company on the market because they don't want to get a bad price. No surprises there. Another one that's a massive difference is the breadth indicators. Look at this. We went from an overbought on the breadth, a very strong breadth indicator, all the way back down in only a few short weeks. And this brings us some interesting statistics because, of course, everyone was talking about breadth the other day. When we get these types of breadth switches, what has happened in the past? It's in line with what we've been talking about, kangaroo style markets. When we've got this reading, we generally see 1 to 2 weeks being slightly positive, but then we get this weakness that comes through. Now, this will coincide very well if it happens with all of our analysis on everything to do with the seasonality this year, September and October, midterm elections, all sorts of things. Another interesting component is what's going on here with the bigger traders out there in terms of silver and gold hedging. We hit the big support on gold this week. We basically get into that 1700 zone just underneath, and then we found some strength coming off the non-farm payrolls number. Have a look here at silver hedging positions. Often when we've got these types of readings here in terms of hedging positions, we've seen basing of the market. We've just entered that zone again for silver. So does this mean that we're in a base? It could be sideways, but at least holding zone. Well, it certainly could be, and we'll talk about that with gold a little bit later. We've also got here, of course, presidential cycles. You'll notice that weakness that comes through that August into October, and then that rally. Will we get the rally again? This is the million-dollar question that most people are asking. Yeah, it's very possible. I mean, statistics would have you believe that if we do see the seasonal weakness coming through September into October, then we've got to be very open to the idea of a decent rally. It doesn't mean this kind of extreme action, but certainly we have to be open to it. Why do we have to be open to it? Frankly, just the amount of bearish action on these markets. Hedge funds remain incredibly short. They did get squeezed. So when that market hit 43.20 recently, and a lot of people were really starting to lose faith in the short, they got squeezed. So a few of them had to close. That's good because they were net short way too much. You'll notice on this chart, if we go back to 2013, this was the most short hedge fund managers were ever since that really date. We also had a huge amount of money managers short pretty heavily. They since have purchased back in, which is again exactly what you need to see. You need to get it off this bottom. There's too many people short. You need to squeeze a few of them out to allow the next market move to actually occur. If we talk about September and we continue to go through, oftentimes once we get back from the Labor Day long weekend and we go through the start of September, we get kind of like a potential bullish, maybe basing market for the start of September into a horror weakness near the end that leads into October. Will it be the same? This is from 1950 to 2021 stats, so certainly worthwhile paying attention to. Why could this be? Frankly, too many retail traders are starting to turn bearish. We saw dumb money versus smart money. 50.4% of people are bearish now in the market over the next 6 months. That's starting to get up there. We've seen a higher reading this year, but you'll notice that it's creeping up as the market's going down, and it can lead to markets staying, let's call it flat to up. And we have to be open to this concept as much as we can. For anyone that hasn't joined our channel before, firstly, welcome. But also, this is our lead indicator of recession. Pretty much whenever we get over 50% of all yields, that is bond yields, inverting, we know that they haven't been wrong in the last 50 years. We have no reason to believe they will be. And then we look at the correlations to the bear case scenarios. That's where we are at this stage in terms of yields. And you've got to really follow that. We know that if we were in bear markets, these are the 1800s. This is 200 plus years of data. And the average bear markets last for a little bit longer than people expect. So if we are in a recession, this could spill over very easily into 2023 and continue to create the kangaroo style market that is great for day traders, scalpers, and even some swing traders, but potentially a little bit scary for some investors out there. In all scenarios so far with correlations, we're seeing doubling dip scenarios. In both bull cases where there was a recession, we actually saw markets come back in. This one wasn't technically a recession, but you know what I'm saying. We usually see those dipping. And for bears, we actually usually have those new lows. And of course, the two most correlated scenarios are horror shows, 73 and 2008. Imagine if we get those new lows and we start coming through. How low could we go on the SPY? Is it 31, 3200, or is it even worse? Let me know what you think is possible here over, let's say, the next 18 months for the SPY. Do you guys think that it'll hit these levels or not? Let me know in the comments down below. Always interested in your opinion. So before we jump into the charts any further, I'd like to thank the sponsor of today's video, which is Tiger Brokers. Now, one of the things I love about Tiger Brokers in particular is, of course, their constant addition to the platform. And you'll notice here a great charting software. We've got earnings, we've got splits. We have, of course, all of our standard needs for in terms of indicators. And if you wish to add indicators on the charts, you can do so by just clicking the button up here, selecting your Bollinger, selecting your EMAs, changing them, selecting your VWAP. It's all here on the charts. This is something that I think is really phenomenal. Of course, being able to additionally change your displays, changing whether you want VWAP on there or anything else in a different color. All of this is customizable, and a lot of brokers fall down at this particular stage. They don't have the charting software to back up the great implementation of everything else. Another big thing for Tiger Brokers is, of course, this right-hand side here where we get the quotes, analysis, financials, filings, etc. And once you can do that, you go over here and let's say you go on the analysis, you can click more, get summaries of the businesses, shareholder information, dividends, short interest. If you're someone that likes the squeeze, you can figure it out all here. It really is all there. But as you guys know, my favorite feature of all has to be this one, and that is being able to customize your own screen to your needs. If you want to know what time it is in somewhere else in the world, being maybe Sydney, or you want to know what time it is in New York if you trade from another country into America, You can do that. You can put the chart on there. You can put, of course, your watch list, level 1, level 2 data. Everything else can be put on the screen, including your analysis window. So if you're interested in finding out more about Tiger Brokers, you can click on the link in the description down below for their special offers. And there's plenty of different ones there for you. Okay, well, let's jump back into the charts and take a look here at the VIX. What did the volatility index tell us? Well, the VIX jumped. No surprises, went down, then rallied up, 25.46, still in the middling of the zone. We're not at the extreme 20, nor are we at 30 or 35. This is where we see fear. This is where we see potentially greed at this stage in the markets. And those are the two levels that you want to be focused in on. We also saw the yield. This is the 2-year after the non-farms payrolls number, because of the partial undertone of weakness in there, drop. Maybe it shows that the Fed is doing its job weakening the economy. I mean, this is a weird time in 2022. If we have a weakening economy, it seems to be good for inflation. You know, it's ridiculous, but that's what's happening. So we saw the 2-year drop quite a lot. This also pushed down some of our highest yield levels. So a lot of people don't know that, yes, that's the 2-year, but of course, the Fed's fund rate is expected to get close to 4% coming into the first quarter of 2023. 3.83%. You'll notice it dropped slightly here through the session. The 10-year was also down, again, just showing that the market maybe got a little bit ahead of itself. And is this peak inflation? Is this the peaking of these yields? Are we getting close? Look, I've said this for a while. When we were over here, I felt like yields were at their close to highest levels. We've seen since then Europe getting really owned. I mean, if you're talking about Europe, if you're talking about the UK, that's where inflation is the most out of control, even compared to other countries out there. And this is, you know, probably mostly the concern, the flow through coming back into that area. Does it help us with the markets? Not quite yet. But of course, if we continue to see that 2-year come down, that's strongly correlated usually with bullish market conditions. So we do need to pay attention to that. The US dollar's closed its weekly 109.609. If we go down to the daily, you'll notice that it took off a little bit and then put it back on when the market started falling over. Does this allow potential shorters to actually come into the US dollar? It's a pretty scary zone. There's no doubt that if you look at this chart, you'd say, well, it's climbing higher, but it's technically dulling. So what that means is it's weakening here as it's going up. It's not really making, you know, contained big highs, nice rallies, those types of things. Now, often people have a kind of rule that they don't ever short a dulling market. And that's totally fair. And I think that we may not have seen enough reasons just yet. But the pullback that was here is very interesting. I would prefer, if you're looking for shorts on the US dollar, for it to get underneath 108.50. And at this stage, it's still in an upward trend. There's no state really right now to say, okay, this US dollar is going down. If it gets underneath this level, we have a different discussion. Tough trade right now. Probably wait and see for the US dollar. The reason why we're even considering this short idea on the US dollar, though, is because gold and other instruments are hitting key supports. We saw gold come back down to our beautiful pocket down here, which sits just above 1700 or just below 1700, 1680, 1690, 1700 for gold. It's pretty strong investment level for many traders and investors out there for the last pretty much year and a half. When we scroll down to the 30 minutes, you'll notice that some of the key levels we mentioned in the previous video got taken out, specifically the 1711 and this 1708. This little zone in here most likely held some orders. I'd like to actually see gold kind of dip, maybe even back to 1700 in the next week coming, and then move past this 1725 to 1730. We've been all over gold recently. It's been very accurate so far. This is the right type of setup in terms of structure to start to see that turnaround from a technical perspective. This is a good sign. It held very well considering the strength of the US dollar. And I think it shows you that there's demand from someone underneath, most likely some composite man Wall Street action coming back into this metal. If we also talk about silver as well, and we look at silver, it did rally a little bit. Let's put it in perspective of where silver is. A very hectic zone. It's come back down to a zone that has been sitting at for a long time. We saw that the data was kind of pointing towards potential stabilization. At this point, it swung the lows. It did bounce back up. It didn't quite close as high as you'd like it to. So silver is a bit of both. Remember, silver is used in construction. So it's a demand metal as well as it is a precious metal. And that's something that's a bit unique to silver. However, if gold does find the rallies, you'll expect silver to go up. Like more percentage, it's like Ethereum versus Bitcoin. Ethereum will do better percentage, but when the market goes bad, oh wow, Ethereum usually gets belted a lot harder than Bitcoin as a raw percentage. UK oil, or oil in general, is finding basing support. We haven't really seen any turnaround story yet. We'll update this next week. I think we'll come back, but it is technically on support. You'll notice the weekly close is right around all those previous wicks, and you can just see how important this zone is. So many, 1, 2, 3, 4, 5. We'll come back and revisit this later on. Tesla, what's going on there? Closed the weekly underneath this range. Now, the stock market will ultimately make the decision on Tesla for now. That is the Sp500. If it rallies off this 39.20 zone, which it certainly could, and we'll talk about that very soon, then we'd probably expect Tesla to get back into the range. If you're looking at this chart just by itself, you would say, well, it looks a little bit weak. The market should come back down to here. And of course, if your bear case scenario, 250 into maybe even the 240 range for Tesla is very, very possible, and certainly a key zone to be probably setting alerts for in the future. Apple also ended close to its low, slight rejection there in the last couple of hours or minutes of trade, and you'll notice that it came straight off that base and it sold right off this resistance. Now, this is really important for bulls and bears. There is something here at 162. There's also something at 160. What if the market does this? Does it then start to go back up to something like a 166? Previous gap, previous support. I think it's very possible. A doubling bottom kind of setup. Apple is right on support leading into next week. This becomes super important if you believe the stock market is also there. Because remember, if Apple goes from here back up to here, it's about 6.64%. You'll notice that this coincides with around 41.25 on the SPY. Very similar numbers and everything to do with those levels. Do we expect Apple to potentially come lower in the future? Absolutely. If we get new lows here, we expose all sorts of bad levels for Apple. 142, all sorts of things, even this 150. These are the types of levels where we might see small bounces. But use the Sp500 and the Nasdaq to really detail or drive in on Apple. I think that's going to be the most important. The news coming out for Nvidia has us eyeing this level here. It bounced off that in the previous session. We saw the swing low and it just went boom straight back up. Now it's coming back down. This is pretty normal. It looks incredibly terrifying, and that's probably what makes it an opportunity in some ways. The big problem is the dividend. Be very careful. The dividend could drop it underneath and then completely ruin and start to create some algo flow in the opposite direction. If you're an Nvidia holder, you're looking and you're hoping for a rally early next week to push this back through maybe to a gap close of 150. That would probably be a lot of people's targets. And do remember, dividend is coming. It's not huge, but it still will make a move. The DAX ended the week pretty badly. It rejected back down. We've got big support sitting at 12,450 for the DAX. It was a previous gap zone. It's been previous support now throughout 2022. Big buying wicks we saw previously that got us to this downward trend. This certainly was a great short zone, and so far so good for the shorters. Let's take a look at the smaller timeframes here. We'll go down to the 15-minute, have a look at how the market's patterning up. And it's found a little bit of support on this area here. You can see it made new low. I'd like to see it take that level, which is around 12,762. And again, use the SPY as the guide here for the DAX, but you'd want to see that level get taken, and that will give it, potentially a little bit of bullish action moving forward. The Nasdaq wasn't the one that swung. The SPY, which I'm about to show you, actually was the much stronger position to really be around. This was a good level for some take profits though. If you were scaling out, I wouldn't have blamed you for taking a bit there. Of course, we do have some potential up to the 12,800, which we'll talk about soon. And then the market just fell off like a brick and it came straight back down to this heavy support, and you saw some buyers come in near the close. This is a pretty damn critical zone. If you look at Nasdaq across the board, you look at any of these big markets, if we lose this position, we lose this low, and we don't bounce. Notice where the close happened. See, the spike was very important. It pushed us back into the previous closes over here, which just shows how strong this level is. Remember, if we lose this level, what opens up? Whoa, whoa, whoa. Back down here, 11,500, that kind of area. A lot of you aren't going to like that. Also, we open up this one, 11,800, 11,700. So we've got two pretty damn serious supports after this. At this stage, it's still holding. And although it looks messy, it's not as bad as it might seem. We'll move over here to the S&P 500. You'll notice the 61.8 Fibonacci, the golden ratio. We've come back down to that on the entire move now. And we bounced off it once. We've come back down, we've bounced off it twice, and more importantly, we've got that weekly close. Let's take a look at this weekly close. Right on the money with the other ones. Everything here, resistance, 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 support. We're on roll reversal leading into the Tuesday. So there is still a strong reason to say that this is a critical support and we haven't seen it fail yet. So you've got to be open to the bull side for at least potential like this, okay? That is a movement up with a potential sell the rip story later on in it. We are in the worst month of the year. Don't get me wrong. There's two ways to short. There's the CFD route, which is where you want to find out, you want to take basically the dips both ways. That's what a trader wants. You want the buys, you want the sells, you want everything. Make as much money as possible when you find key levels. The other way is, of course, to go, okay, well, I'm short, I'm net short. How's the easiest way to do that? Well, it's select areas that you believe the market's going to go to and use options. I've talked about it a lot on this channel. I think options are one of the best shorting kind of ways or instruments to do it. And there are many reasons for that. If you're from Australia, it can also definitely let you sleep a little bit better. Managing risk is key. It's boring, and I don't bring it up that often because everyone hates to hear about it. But you guys know it's so key. Remember, Warren Buffett has that rule number 1, never lose money. Rule number 2, like Fight Club, don't forget rule number 1. It's very correct. We want to kind of hold all that money. When we're at McDonald's flipping burgers or we earned those money, remember back to your jobs doing the mowing of the lawn or anything. You don't want to lose the cash that you put your hard-earned blood, sweat, and tears into. That's what we want to do. Patience, react, try not to predict. Now, what's going on here? Market came back, tested the lows. This is the US 500. It closed at the very important level. This was the gap close, or this is a very important zone here. Now, if we actually zoom in even closer, the market put in a little bit of a high here around 39.45-ish. So we saw like a little bit of, it was finding some, and then it dropped through and then it came back. I'd like to see that taken and then a rally. I really would like to see a rally here. I think it's kind of due based on the current sell-offs. This is where things got sneaky, and I mentioned the room, because basically we swung these highs. We took out the high and then we constructed kind of like a little bit of chop, and then we just fell off like a cliff. This was clearly a Wall Street trap. That's an absolute trap. And yeah, the SPY showed it to you. The Nasdaq showed a key level, no doubt a supply level, but the SPY got the swing. And that's the most important thing. It's why I say the SPY, the SPY, the SPY. If you like the Nasdaq, cool. I like the Nasdaq too. But if you want to trade, look at the SPY. The SPY will tell you what the others are going to do. It will also give you the greatest probabilities of having successful reads. The Nasdaq, if you ever wondered why you get owned, it's because it spikes everywhere. It's made up of not that many companies in terms of its huge weighting. So this is a good support. If we lose this support, of course, we've talked about these scenarios, and the scenarios get pretty dire for a lot of people. The next up level would be somewhere around that 38.50. And then, of course, I'd really be looking after, if it got underneath here, towards that 37.50, 37.80, the previous defended zone that we spoke about so much, and relatively we got it correct last time towards that rally. So this will be the next critical. We're on it. If you're a bear, you're hoping it goes lower. But at this stage, I'm hoping and seeing in these charts that there is some hope for the bull side. Let's move over here to the max pain. So you'll see it was 403. We'll just quickly refresh this. It didn't quite close there. I don't know if it'll be fully updated yet. I don't think it will, but you'll notice that max pain was moving down. They still managed to close the options pretty well. Notice how a lot of the 400s were taken out during the day. That's very interesting. Those 400s were taken out. Someone cleaned them up, which allowed the market, it's probably why it sat there for a while, which allowed the market to then go back down to the most important put wall. This was very sneaky stuff. Someone definitely closed out those options. You can see that there was a big difference in the previous one. This would have pushed max pain down lower. I would say it was actually even lower than this once the numbers come out. But yeah, we had a 390 put wall. Let's take a look at the week ahead. It's still not the major options expirations, but again, the 380 this week is the big one here. So I'll just make sure the 9th, yeah, the 9th. So we have here the 380 as the kind of biggest level. If we're starting to think about the markets coming into the 6th, we have a lot of 400 calls, which is very interesting. So it means quite a few people did turn bullish and try to get it in. Max pain at 400, max pain at 400, again 368 there, and 380 for this one, max pain at 400. So it all points towards the potential of a neutralized market similar to other Septembers with kangaroo chop. I would like to see the upside at this stage, but options aren't really giving us too much action. Bitcoin continues to hold its best it can. It's still floating around this zone. I'm looking towards Bitcoin, if the market does break out, that is the US stock market, towards 21,000 or 21,600. I do think that there'll be big sellers up here, guys. That in this particular zone, 21,500, 21,600, it's going to be a big sell-off zone should they get up there. Daily does show a very nice bullish hammer. It didn't close above that, which is a bit of a pain. It's currently holding in the zone. If it drops this, I think it's going 17 and a bit, actually. So I hope it doesn't drop this level if you are feeling bullish on crypto. At this stage, you're hoping towards this level here. The US stock market will have to come with you. Ethereum is fairly similar. If you take a look at Ethereum on the daily, you can see that kind of little bit of rejection. It looks a bit nasty. If you go down to the smaller time frames, we've highlighted this box as where the demand is. And so far, so good for that. Of course, time will tell. It's a little bit choppy on the crypto sphere at the moment. Week ahead information, if you're interested in following us, follow us on Twitter at FXEvolution. You can also join our public Discord community, links in the description down below, our private Discord community, free 7-day trial. And of course, let's have a look at the week ahead in terms of news. So we've got the bank holidays for both Canada and the US. Not much will happen there. We've got for the Australians, the RBA rate statement will come out. It's expected cash rate will go up again. So watch out for housing in Australia, guys. That's going to be heavily affected. Then we've got the ISM Services PMI, New York time, 10 a.m. That's coming out. Then we scroll down. We keep going through and we've got a little bit of economic data coming out for other countries. And then the Papa Powell comes out to annoy us all near the end of next week. Fed Chair Powell speaks, 9:10 a.m. New York time. Oh yeah, there he is. So we'll find out what he has to say about the pivoting, non-pivoting Fed and what he believes about the, of course, US economy. If you're interested in finding out more about Tiger Brokers, you can definitely check the links in the description down below and, of course, open that account. Subscribe if you enjoy the content and, of course, give us a thumbs up if you find value in the video. I do want to let everybody know that next week I'll be going off on my honeymoon, so I will still be making some videos for you guys. It will just be not every day. I can't always do it, unfortunately, but don't worry, if we'll try to do as best we can to bring as many videos as possible, and we'll resume the week after about the Wednesday, Tuesday in terms of videos. So I'll still get some out. Make sure you check your feeds and have a good weekend. Bye for now.